Stop bank deposit bail-in once and for all. Martin North, John Adams, in the interest of the people. Hello, John.
Hello, sir.
So guess what? Bail-ins come back.
Indeed. We were planning to talk a lot about the future state of the economy and obviously carry on from our last conversation, but some big breaking news has happened late last week that we need to update our audience on. The perhaps a little bit hyperbole, but it is, in my view, the ultimate battle between good and evil over the next 3 weeks. We have been talking, going back to 2018, about this issue of bail-in, what happened in Cyprus, the forced confiscation of retail bank deposits. And we have gone into a lot of detail. We've exclusively revealed loopholes in the legislation, and we've shown how a bail-in could happen in Australia, even though the establishment from the government, from the Treasury, the RBA, APRA, they've all said can't happen in Australia. We've said there's a loophole that can happen. And obviously we've documented quite extensively, and you've obviously on Walk the World about New Zealand and some of the other regimes around the world. So a couple of months ago, we had Senator Malcolm Roberts. He introduced a private senator's bill into the Senate with specific simple amendments to the Banking Act to make this crystal clear once and for all that bail-in could not happen. Now, Thursday last week, the senator's bill was referred to the Senate Economics Committee. So the same committee that we've been doing battle with on the cash ban now has started a inquiry as of the Thursday that just passed, and tonight we're filming on Sunday. And basically we have 3 weeks to put together our submissions, take them forward, and then we'll obviously see about the next steps after that.
So, John, it's worth saying, I think, there is a long history here to our discussion around bail-in, and we're probably not going to spend a lot of time this evening going back over the old ground. But the linchpin issue is it feasible for retail deposits effectively to be converted to equity in a banking crisis? That's the critical point. And the legislation in Australia is flaky, right? So there does leave the crack at least open, the door open for that to happen, despite, as you said, everybody in authority saying, no, we'd never do it. So this simple legislation basically shuts the door.
Yes, and for some of our new viewers who may be watching this, so by way of context, after the GFC, there was a number of communiques that was passed at 2010. Let's put that up. We won't go through a lot of detail, but in 2010 at the G20 meeting, there was a recognition that there was an issue of the too big to fail problem in terms of big banks, and that if these banks got into trouble again, it was going to be too costly for government to bail them out. So we needed some sort of solution. Now, in 2014, when the G20 met in Brisbane, there was an agreement, and this goes to the Financial Stability Board, and we'll put this up, the 2014 communique, and they all agreed to a global framework around bail-in. And obviously the test case before even this resolution was passed in 2014 was Cyprus in 2012-13, where the bank confiscated deposits, 47% of deposits above 100,000 euros, because they were basically on the verge of going bankrupt. So obviously all the G20 partners agreed to a framework, and everyone has implemented that framework in one form or another using domestic legislation. In terms of Australia, our commitment to that bail-in framework was passed with the Financial Sector Legislation Amendments, Crisis Resolution Powers and Other Measures Act 2018. We've gone through this in some detail about that there is a specific clause, and we'll just quickly put this up on the screen. So so bail-in is in the legislation referred to as conversion and write-off. So there is this ambiguity about the law that says that that these provisions around conversion and write-off refers to any other instrument. and that is vague. That opens up the can of worms. So a number of organisations, including the CEC, have argued that may include retail bank deposits. At the time when the inquiry happened with Senator Jane Hume, they said that no, deposits were not included. What we went on to show was that there's another piece of the legislation that says that that there needs to be express terms in the financial instrument that this can be bailed in. And what we showed was that using the contract terms and conditions of bank accounts, banks have enormous flexibility to change their T's and C's, and they can easily insert clauses into those terms and conditions to basically say that these bank deposits can be bailed in. So we had, last year we presented some legal advice from a Sydney solicitor who looked at our legal argument and said that yes, there is a loophole. And so in this inquiry, so I've started the process of drafting my submission. And so what I would hope to do over the next few days is to put together all of the documentation that we've discussed over the last 2 years, including how bail-in happened in the 19th century in Australia, when the depression happened in 1892, which was called Reconstruction, and basically, say there are some loopholes in the legislation, but also, so not only do we need some a clause in the legislation to say that this term, any other instrument, does not include deposits, we need also some language to say that APRA cannot tell banks to change these terms and conditions. They can't change any contracts for the purposes of bail-in, and that's also what the legislation does.
Yeah, and it's just worth underscoring again, as you said right at the front, in New Zealand, they've got a very explicit process called the Open Banking Resolution, which basically says, deposits can be grabbed, can be converted into equity to save a bank, right?
Correct.
So this is not just boxing at shadows. This is actually a real risk.
Yes.
And so this piece of legislation is important because it effectively, in the current climate, very important, shuts the door on using deposits.
Indeed. And so what I think we're going to learn in this next 3 weeks, Martin, is are we... So people have called us conspiracy theorists. So are we conspiracy... because the establishment will have to reveal their true hand on this. There is no downside to government. So if everything they've said to us to date is legit and there is no risk of bail-in of retail bank deposits, because... we've been saying that this is a serious issue, and obviously you've been referring to what happened in New Zealand. We've had a number of letters from members of Parliament, from the Treasury, from APRA, from others, saying that there is no issue, there is no risk of bail-in of retail bank deposits. And there's always been this nice excuse of the guarantee, the $250,000 guarantee, to say that your deposits are safe, don't withdraw your money out of the bank, etc. So there is no downside risk to passing the legislation. So if everything is above board and there is no risk of bail-in, the government should have no reason to not pass the legislation. But if we start to see several objections from... Now, here's the thing. There's going to be two interesting responses, one from the banks and then the government. Now, bail-in is, even though it helps the banks, the ultimate people who need bail-in is the government, because bail-in is designed to limit the amount of financial exposure taxpayers have to bailing out the banks. So now, I'm not necessarily interested to see what the banks have to say on this particular issue, because this is really, I want to see what Treasury says and what APRA says. And so if they say... No, we can't have this, or or that this is unnecessary, they are going to expose themselves to the real agenda, and the real agenda is having the ability to steal deposits in a crisis. Yeah,
and it's worth saying a number of the banks that I've spoken to would welcome clarity, right? So they actually think that it is confusing at the moment, and they're not totally clear, and they've not got clarity from the regulators. So I think the banks would probably quite welcome clarity on this point.
Yes, indeed. So in terms of the inquiry, submissions close on Friday the 10th of July. So we have 3 weeks from basically now. Now, there has been no announcement on public hearings. So I'll be, just like what we did with the cash ban, I'll be sending an email to the Secretariat asking to testify if there is a public hearing. And basically saying that I'll be putting in a relatively extensive submission into the process. The committee is required to report back to the Senate by the 10th of August. So I haven't had the chance to speak to any of the major parties in Parliament. So not sure where either, say, Coalition, Labor, Greens, in terms of Centre Alliance, etc., where they all sit on this particular bill. But I think the first thing we have to tackle is the inquiry itself. Put all the arguments forward, and the more the merrier in terms of this process. And we need to apply pressure so that they can't just fob us off, kind of like what they tried to do with the cash ban.
Yep. So it's the same sort of process. So people can actually help by making a submission. It's a public process as normal. And I suppose contact your MP as well in terms of actually making sure that they know that you know that this is an important issue.
Indeed, absolutely. Yeah, so a lot of people, particularly in the House of Reps, they wouldn't be aware that Senator Roberts introduced a private bill and that this is now in front of an inquiry. So if you notify your local MP and saying that this is this is a simple bill, but it's very important, you would actually get brownie points from me if you actually made this sort of into law, and we'll actually have to go through that. Now, one of the things I will just say, Martin, is that with the cash ban inquiry, we had some issues around people's submissions being treated as correspondence versus a proper submission. So my advice would be 2 or 3 points. First one is try to write a formal submission to the committee. And kind of write it, the way I sort of write these is kind of like a letter rather than just an email. So if you write a letter. Now, the other thing is that I would recommend that you just don't send it in a email format. So, put in a Word document and make it into a PDF, and then submit the PDF to say this is a standalone independent document. This is a submission. This is not correspondence. And when you and I have put in our submissions in the past, there's a special process that the committee has about uploading submissions. So we used that process last time, and even though they say you can email us your submission, I think that if you use their upload process, that will also signal to the committee that this is a formal submission, this is not correspondence. So, because I know that quite a few of our viewers, and there's obviously, I think from memory, 2,600 that were submitted
to the Treasury.
Yeah. Oh, we had about 36. We had 3,600 for Treasury,
yep.
2,600 for the Senate committee,
yep.
and a lot of people. More than 2,000 were treated as correspondence. So if you want your submission to be considered to be a formal submission and not correspondence, I think following these steps I've just outlined will actually help help your chances of it being considered a formal submission.
Yeah, and it doesn't have to be a long submission, right? But there are obviously the 3 or 4 points that we've made are essentially the cornerstones of how you would actually go about making an argument.
Now, the other point is that, I have had a number of people who have watched our show about bail-in and have gone to their local bank for clarity, and the banks haven't been able to give them clarity. So I think even though we'll be making technical arguments in terms of the law, in terms of how the law could be skewed to actually make this happen in this broader context of bail-in that the Australian government has signed on to, I think the point that this legislation gives, it will actually boost confidence and create certainty. So I think if people from the standpoint of I'm a bank customer, the law seems unclear to me, the bank can't give me a clear answer, pass this legislation and we're all on the same page. I think that's a reasonably good argument to make.
Yeah, I think it is, absolutely. And the fact is that people try to get deflected into this 250k guarantee, right? And it's just worth articulating again, 250k guarantee is when a bank's fallen over,
Yes.
right? In the case of a bank that's not fallen over, right, there's no guarantee.
That's right.
And essentially, there is a risk that deposits could be grabbed. And in the current environment, with all the risks in the banking system and everything that's going on with the economy, this is becoming probably a more critical issue than ever. So, therefore, this is really an opportune time to nail this particular issue.
Yes. I mean, look, yes. So we've made this point in the past that, the guarantee, even though the guarantee is very shaky in and of itself, only happens when a bank declares insolvency. Bail-in is to prevent the insolvency from occurring. Therefore, if you bail in, there is no insurance,
Yep.
and your deposit is at risk. And because and just for the historical point is so. Because this is a point of law that I'm very uncomfortable with, I've withdrawn my life savings out of the banking system because of the risk. And I'm not sure. I think last time you said that you still have your money in certain banks. I'm not sure if that's still the case or whether
still the case, because I still don't think they'll do it, because I think the backlash would be astronomical if they did. But we'll see.
We will see. Well, I mean, the thing is, one of the things I think it's important to note is, particularly in the context of the Reserve Bank, I mean, we've seen in the last couple of days documents that have been released through Freedom of Information requests where RBA officials even went to the extent of let's shut down all real estate transactions so there's no price discovery in the market. So one thing we have learnt through this COVID-19 process is if the government, if the RBA, if APRA get desperate, everything's on the table, including this particular option, which would be, yes, it would be devastating for retail depositors who actually got caught out on this. But I think this is like the ultimate test of, in terms of perhaps the credibility of our entire show. I mean, we've sort of made this point of this is a real issue. The government says there's no issue. We have legal advice saying that, no, this is a real issue. So let's see what happens in this process, and let's see whether the government actually says, okay, just to make everyone happy, just to make everything clear, let's actually do this. Or are they going to actually pull up a fight? And on what grounds do they say, no, we're not going to pass this?
Yep. So a chance to shut the door on the bail-in, make your submissions, and we'll keep everybody informed as we go ahead.
Absolutely.
John, I appreciate your time.
Thank you.
Martin North, John Adams, in the interest of the people. We'll see you next time.